Hello everybody and a happy new year. My name is Nicole and I'm a technical analyst and private investor, and I'm wishing you a very prosperous new year. And it's certainly kicked off in the very first week, hasn't it? And so therefore I've picked a daily chart of the price of spot gold in US dollars. And you can see that for months and months we moved broadly sideways. Ever since sort of early August we moved, and it was capped most of the time at $1,540. Now with large rectangles like that, the longer the rectangle, you have two upside measures of how far you might go as and when you break out. One is the height of the rectangle and the second one is the length of the rectangle. And so you can see, like a straight jacket, when you burst, you really burst a lot. And that's what's happened over the weekend. Well, already Friday you can see it was building up to that close above 1,540, and then we gapped over the weekend and traded up some more to the highest price on Monday since April 2013, I think it was. And then we had this enormous spike up way just above $1,600. I think it's 1606 was the high. And again, front page news on the media, wow, gold's trading above $1,600. Well, it's all changed now, isn't it? And it's all fallen flat on its face. Yeah, ironically, first thing this morning, it was back down at $1,540. Now, what had been resistance, in theory, should now be support. So let's see if that level is going to support for the rest of this week and maybe early into next week, in which case we might have another attack at the $1,600 level. If, on the other hand, we fail and we close below 1,540, then we're back inside the straitjacket. Now don't despair, because there is money to be made, not only in trending markets, but markets that are holding between well-defined parameters. So, keep an open mind on this particular chart. Now what's interesting in my next chart is that other than the obvious candidates, markets have not been rattled too badly by the standoff between Iran and the United States, with a little help from Iraq. And this is the price of New York crude oil. This is the international benchmark, WTI it's called. And you can see that, a bit like gold, it had a spike just above the $65 level, but that was not maintained. We've traded down already this week. We've got a potential bearish engulfing pattern on the charts. And yes, we're well within a well-established range between about $50 and $65. I expect that to hold for much of this year, with a slight downside tendency, possibly with a dip down to $45 late this year. So crude oil had a bit of a burst, a bit of excitement, but look, it's not much difference than the price action that we've seen twice already in 2019. So it's like, that's no big deal. This Iran business is no big deal as far as this market is concerned. Now, the other one that's often used as a risk-off trade, as stockbrokers like to call it, my third chart is the Eurodollar against the Swiss franc. Now, the Swiss National Bank is an absolute star in pioneer in terms of unconventional financial intervention and political and all the rest of it. But you can see that they've been desperately trying to keep the Swiss franc at over 1 to the euro. They want it to be 1 something centimes Swiss to the euro. And it's not. It's been trending down slowly. Again, the move by Iran and the ballistic missiles that they've been throwing around have nudged it slightly lower, but I think we're just about there. We're not taking account of what's going on there very much. So those are my 3 risk-off so-called trade charts for this week. Thank you very much for watching.